Hi traders, and welcome to the technical analysis market wrap on the 26th of February. So we saw some interesting moves earlier in the week where we saw strength in a lot of the majors, but we saw the real fireworks start last night when the US started to sell off throughout the US session. So we'll jump straight into some of the majors, and also we'll look at the US dollar index as well to see where that really projects the next path for a lot of the dollar based pairs. But we're going to see some really interesting moves. We'll jump straight into the markets and have a look. The Aussie USD is the first one we'll have a look at here. So you can see that we had the inverse head and shoulders set up. Basically, we were talking about last week that if it broke, it was going to probably go all the way to the 80 cents, and that it did. So yeah, you can see here that it hit the pretty much 80 cents right on the money. We've got the neckline for the inverse head and shoulders, so everyone can see it, is that one there. That's the one we were talking about. This is the shoulder here, the head and the right shoulder. And the distance on how we work out this particular pattern, I'll just quickly draw that up as well so you can see what we're talking about. It's measured from the head to the neckline and then projected up. Okay, so you can see that is our projection for the inverse head and shoulders. And inverse head and shoulders in the direction of the trend, of course, is even more important, which this one was. And it pretty much hit it straight to the letter before it actually sold off. So even though you can see that it actually sold off from the point of the resistance level, it was probably going to find a struggle to get past that level. You've got to go to a weekly to really understand why that level is important. You can see here the previous resistance way back in 17 provided the key there. 80 cents, of course, as well, is a very round number. It was always going to have trouble getting past that in the first instance. But as you can see, it's had a very, very big rejection now, and the pattern played out perfectly. So that's one of those patterns when you can see everything's lining up perfectly for what you're trying to achieve. It's going to always struggle to get past that level. So you wouldn't want to be going for too much, that's for sure. You'd be brave to be trading past the 80 cents, especially when you're longing from around that sort of mid 77 area. But good pattern. What we want to do with this one now is probably a bit of wait and see action, because realistically, there's probably a little bit more to fall before it actually starts to pick up again. I wouldn't want this one to come back and retest the inverse line of the neckline here that you can see, because that's too much of a pullback. And also, that pattern is now broken. You've got to be really mindful that even if it did come back, you're not retesting this pattern, because this pattern's already filled its potential. Now, if it came back and touched the 20 moving average, that's a different story, because then it could be potentially continuing on in an upward direction, which is perfectly fine. But just be mindful that you're not trading the inverse head and shoulders, and you are actually trading a trend and a pullback to a 20 moving average. So I would be waiting for that. I think that it needs to play out a little bit more before I'd actually get involved in this trade now. And any movement is probably down to the 20 moving average. So what you need to ideally get is a price pullback to here, around this level here. You need to go to a smaller time frame for that, and you can see here, even on a 15-minute, look for the pullbacks to the 20 moving average and short it down to the daily 20, which should give you a good reload zone if it's going to go up from here. But just be mindful that it's going to be it's very dependent on what happens in the US tonight. If the US sells off again, you can bet your bottom dollar that these dollar-based pairs are probably going to keep falling. So you want to be very, very mindful that that's going to play a bit of a role. So keep your scalps short until the US Open tonight. If you're going to trade this, probably just look for your 20 to 50 pip moves and see if you can get them done before the US Open tonight. So then you can look for more long-range plans early next week once we have that data. All right, we will go over to the US Dollar Cad. This one was looking like it was gone for all money yesterday, about 12 hours ago, before the US Open. But as you can see now, we've got a very, very big reversal candle. It tried to push down past this support zone here. Was very, very crucial in this particular pair. It broke that, and it looked like it was basically gone for all money, but it's had a very, very big reversal now. The dollar strength has obviously increased, but probably more importantly than that, look, the US dollar yen and the US dollar Swissy were going up anyway, even though this one was falling. So it's not all just about the dollar strength, but as you can see, we're starting to get some good moves up. If it pushes up and closes above this support line on a daily, I'd be looking at potentially getting it to the 27.50 to these basic previous zones. So that's the highest end, probably about 128.80. But the first instance, you'd be looking for that sort of 127 move and a 127.50. All of these are very, very key levels for the US dollar CAD. So you want to see some pretty good breaks of this level before you get involved. But it is looking extraordinarily strong all of a sudden. So we'll jump straight into the dollar index now. We'll have a quick look at that one before we look at the euro. You can see that this was looking a little bit ominous as well. You can see the head and shoulders pattern here that was playing out in the direction of the longer term trend on a daily chart. So it's a pretty significant pattern. And as you can see, for all intents and purposes, 12 hours ago, this was looking like a very, very bearish long range candle. And its fortunes have reversed given the dollar strength increase. It's starting to push up again now. It's a very, very big reversal. And I think that's probably a really important point of understanding candle structure. Like you can see here, this candle tried to attempt to push to the 20 moving average and sold off quite heavily. The sellers completely took control of this candle, and they were doing the same thing yesterday until we had the big reversals. It's a very, very bullish candle now, especially if it closes up and gets itself above that 90 sort of 30 area. If it can get above there and close above there after a daily candle close, it's going to be very, very strong for potential dollar-based pairs. Above the 20 would be even more important. You can see here that it's tried to do that 3 times in the last week and a half and failed every single time. You can see these big rejections off the 20 moving average, which is pretty ordinary if you're trying to go long. So we want to see that close before we get excited about this one. You've got to be mindful also, this could be just retesting the neckline of the head and shoulders. So if the US recaptures some of the losses from last night, what could definitely happen here is this is just a pullback to the bottom of the neckline, and it can completely sell off and push down all the way into the 88s again. So it's a bit of a guess and check. You want to be making sure that you're not taking long-term trades on this one until we get another full US session and see what it does. Because if it sells off, it's going to mean a considerable amount of strength for this dollar index. So we want to be very, very careful not to be going for too much. We want to be basically going for scalping opportunities, but they're going to come probably in the form of the euro anyway. So we'll move on to that one now. Okay, so we can see here that we've got inverse head and shoulders on the Euro USD as well. The difference between this one though and the one on the Aussie is this one could still potentially be in play because it never reached its potential. So the potential for expectation on this particular one is measuring the head to the neckline, as you can see there, and we push that one up there, and that will be our take profit target. So as you can see, the attempted break of this neckline is actually nowhere near it. In fact, the way it's come back, you wouldn't even be in this trade because it actually closed below it, so it didn't even give you an entry signal into it, which is amazing given what this looked like yesterday evening before the open of the US market. So, and it's just a real important lesson on never jumping the gun and waiting for the candles to close. Because if you were just jumping the gun and expecting that to close above the neckline, it would have been a very painful experience, as you can see. So what we want to look for here is potential two ways. If we're going to trade this pattern out, this pattern can still play up because it hasn't reached its potential, hasn't even given you an entry yet. If you get a close above the neckline on a daily chart, that's going to give us the entry, and then our take profit's going to be around that sort of 123.68. And you'll find that if we bring the chart down a little bit, that's going to coincide. If you're taking the 80% rule, which is around this level here, you're going to be looking at these previous highs. So it's a pretty good guide that a 123.50 is very, very achievable. But in order to do that, obviously, we're have to get a daily close above this level. Now, because we're only looking at scalps until we get a serious market open, which is going to be the London and US markets tonight, what we want to be doing is probably looking for shorting opportunities on this one. We'll drag it right out. We know that we've already got a series of lower highs and lower lows on a 15-minute chart here. Probably trade shorts to the pullback on the 20. As you can see, that's coming down. We know that we've got a target to aim for. So the target that we're looking for is the 20 moving average, okay, which is around this level here, around the 121 sort of 25-30 area. About, probably 30 to 40 pips away. But again, scalping is a good opportunity in times like this when we're waiting for a market to open, and the weakness may continue throughout the day. So if you're looking for something to do today, if we get a little bit of strength and an increase up to the 20 moving average, maybe up to the 121.75.80 again, maybe look for shorting opportunities to try and get it down to around that 121.30, which will be a retest of the 20 moving average, which is a pretty good reload zone on this particular pair. So scalping for the next few hours until we get a good market open on that one as well, okay? The next one we'll have a look at is the pound USD. Now this one's shown incredible strength over the last few weeks. As you can see, we've gone straight up in a very, very big line. The only problem with this one is we've had 2 days of selling now. Okay, so it reached a very, very extreme high there around that one sort of 42 35 to 40 level. Okay, then it sold off. It already had a pretty reasonable sell-off from that candle there, as you'd expect. I mean, it's just gone ballistic. The next candle is obviously a very big bearish long-range candle. What's going to happen now, it's sitting right at the 140 level. Now, although it didn't respect it on the way up, the 140 level is still a very key zone. So I would expect that we're going to see some sort of resistance and support at this level. It's going to probably hover around this level. It's not the best one to actually scalp because it's already at a very important zone. So it's not as lucrative as the Euro USD and say the Aussie USD to scalp in the next few hours because it's at a very key zone. And it's probably movement is going to be fairly limited until we get a serious market open. So probably just a watch and see on this one. If we have more negative movements in the market tonight, you can expect this to get down to the 20 moving average on the daily, which is around that 139 area. If it gets there, I'd be looking for a change of trend on a smaller time frame to see if we can get this one to go long again. It needs to be on at least probably a 1 hour change of trend or a 15-minute change of trend. The upside is huge. You're talking about potential 300 or 400 move up to test the new highs again. So it'll be worth the wait if you can get the momentum swing on your side and a change of trend on a smaller time frame around that 20 moving average. All right, the US dollar yen is the one we'll look at next. We'll go to a daily straight up. This has just been a perfect example of technical perfection. You can see it's been testing the 20 moving average all the way up. I know a lot of people in the group have got this trade. They've been long for quite a while and got many opportunities. This looks like it is going to continue on. You can see it's broken to a new high above the 106. Although this is a resistance level, the 107 is probably its next real target. There's strong resistance at 107. That is, you would almost expect it to get there just on the momentum that it's got at the moment. I don't like jumping on trades, when they're already doing this. If you're not already in, you got to look for a bit of a pullback. The way you trade this, though, it's behaving on a daily. So you go to a 1 hour and look for the potential entries on a 1 hour. So you can see how many times it's touched a 20 moving average and basically taking off from it. Now, this recent one here, I know several people have got this one, and it's already starting to push to new highs, and it's been making a series of higher highs and higher lows all the way, which is awesome. 107 is a pretty logical target for this one. I'd like it to probably pull back to the 20 again, give us an entry. Failing that, if you really want to scalp aggressively, it's not that aggressive. You've got trend on your side, but maybe wait for a 15-minute pullback to a 20 moving average and look for a long on that one and try and get it to the 107. But this is looking fairly strong at the moment and has been a really good trade for several weeks now. All right, the last one we will have a look at today is the S&P 500. Now, of course, we knew that we had a little bit of weakness here. We had a very big candle here that rejected completely. It tested the 50 and then rejected all the way up, which is making it look fairly bullish. Then we had a solid day, but of course, the big selling came in and in the space of a session has basically reversed all of that good work and all of the good work of the buyers there. Now, this is to say this zone is crucial is probably understating it a little bit. If we get a close below the 38 on a daily and break this 50 moving average good and proper, it's going to open itself up to a big move down, potentially down to the 3600 or 3550, which is where the green line is at the moment. That would be ideal. I would like to see that, not because I'm negative on the market, because realistically, whether it goes up or down, we're still going to make money. It's just a case of it provides more opportunities. So realistically, if it sells down to the 3600, say, or 3550, it gives us a really good reload zone for a potential move up. And a healthy trend is one that does pull back occasionally to a good level. That's what we want. So although I want to see weakness now because it gives us a shorting opportunity, it's going to give us longing opportunities down the track, which are going to be even better than what we've got now. Because if it reverses from here and tries to push up to 4,000 again, there's still going to be a bit of an unknown. It hasn't really pulled back properly. It's going into uncharted territory. There is, resistance there that we don't really know about, that we can't trust. Whereas if it comes down all the way to the 3,550 or 3,600, it gives us some really good reload zones to go long. And then when it does get to the 4,000, you can be confident that it's pushed back enough that it could push it and break it and start to go onto new highs. But by then you're already made plenty of pips on the way up. So that's why we're ideally wanting the short. But of course, if it turns around at the 50 and it holds it again, then you're basically going to long the 180 points that are a potential to get to the 4,000 again. But again, that gives us a bit of uncertainty. So I'd be only scalping on the way long or short from this one and look for some longer term positions. And hopefully it'll play the game and give us a bit of negativity tonight so it can give us better longing opportunities into the coming weeks. All right, so I hope everyone's had a great week's trading. It's been really good from a technical standpoint, and I think some of the big moves are only just beginning. So hopefully the fireworks will continue tonight and give us some really good breaks of some of these very, very key levels. Have a great weekend, everyone. I look forward to seeing you all next week.